Well, welcome to another property market update for Sydney, Melbourne and Brisbane in March 22. And as always, we're joined by Staley at Infolio Property Advisors and Your Empire in Melbourne, and Zoran Solano, Hot Property Buyers Agency in Brisbane, and also Your Empire in Brisbane as well. And I'm Chris Gray from Your Empire in Sydney. Well, obviously, there's a lot going on in the world with COVID, or it's not even almost in the news these days. We've got the war going on. How's that going to affect the property market? And also we've got floods around the country as well. Although looking over my shoulder, Sydney's not looking too bad at the moment, but suddenly you've got no internet, so suddenly business gets affected. So we've got all of these things going on in the world. And that's the thing is what's happening with property. Should you be panicking? Should you be thinking this is normal? And if you've got a 20 or 30 year horizon, does it really matter? Well, look, we'll start off with ladies first. Is anything really happening, say, with the floods? Does that make a difference down in Melbourne? And I guess has the war made much of a difference as well?
Interesting. Look, overarchingly, there hasn't been any major impact on the property market as yet, as a result of what's been going on globally or in our fellow states. But it is coming up in commentary. So, for example, there's been buyers that might have made comments like, well, I'm perhaps not going to put forward an offer until the, things over in Europe stabilise, or, I've got some concerns about inflation. We're starting to hear these sorts of things coming out of the mouths of people in the property market. I attended a number of auctions on Saturday. One of them, which was quoted up to $2.6 million, had 12 contracts emailed out to potential buyers, 4 bidders on the day, and sold for $3.2 million. So that shows to me that home buying market, people looking to upscale, have not been, and that was across the board on these sorts of good homes. All of those properties that we went to performed really well. However, there are a couple of, sort of really good mid-century apartments that passed in, one bid, fairly poorly attended. So I think that, again, what we'll probably see is that as markets within markets, the A-grade stock will continue to perform well. And typically, there's a fair amount of insulation in the markets that we're buying in because of the locations and the buyers who are attracted to those properties. So as far as I can see it, there hasn't been any huge changes, or sort of really only subtle changes to how people are responding to the buying market.
Now, Zoran, they talk about these 1 in 100-year floods. I think now they're saying it's a 1% chance, and there's a 1% chance almost every year. You guys up in Queensland are slightly more used to the floods. How do you guys react when these things happen?
Yeah, look, I think one of the big misconceptions is that the entire city of Brisbane just went underwater, right? And it's not the case. There are certain pockets that were affected, and there are certain pockets of the community that then obviously rally together to assist those flood affected. But it's not a surprise a lot of the time when these properties flood. They flood regularly because they're in flood-prone areas. So again, if you're a buyer doing your homework, it's relatively easy to avoid securing a flood-affected property as an interstate buyer by doing your research. But I think right now that there's a lot of shifting landscape in the property market here, and a lot of different things being affected by the flood, not just on the purchasing side, but also the rental as well.
Yeah, and certainly in Sydney, I know when my mum comes to visit from the UK, she thinks I'm abusing my kids because we're living in an apartment and we haven't got a backyard and things like that. But I think certainly when it comes to flood times, to be in a place called Darling Point, which is on a hill and then 10 stories up, as you can see from the view behind, then it's reasonably dry, but not sure about the cars downstairs. But look, certainly for Sydney, I mean, even we don't generally talk about the floods, certainly more maybe in the western suburbs, then they've had lots of issues there with the dams as well. But I heard on the news this morning that even Rose Bay, which is kind of by Double Bay and towards Vaucluse and Bondi, then that was under floods as well. So certainly it does affect everyone, and you've got to bear these things in mind. But again, as you say, most of the time we're not dealing with flood zones there. Now, I thought what I might pull up is I'll just share my screen to get the latest results from CoreLogic, which I should be just sharing there now. So certainly for Sydney, it's saying minus 0.1% in the month. So again, a lot of the banks and the economists have been talking about how the market's going to go down in 2022. And they're saying, like Sydney's turned down, but 0.1%, as they actually, one of the journalists wrote, that's $1,000 based on a $1 or $1.5 million property. And so again, you've got to read into these statistics, because it's to try and call the market within $1,000 is absolutely ridiculous. Melbourne, it's showing is 0 for the month. Brisbane, a fantastic 1.8, so that's certainly up there. But again, is for a lot of us, the market only really starts in kind of the end of January after Australia Day anyway. And I think what Lauren quite often says here is this is the average of the market. So you could easily be getting the blue chip markets here rising at 10%, some of the other markets dropping at 10%, and that gives you your zero. So if you're getting those amazing auction results, then property prices are still rising. What are your additional thoughts, Lauren?
Oh, look, I couldn't agree more. I think that it's really hard when, most people sort of read this data. It feels really skewed to what we're seeing. So having that sort of explained, I think, is super important, Chris, because the reality is it's not only different suburbs that perform differently, but different properties within those suburbs, and even different properties within a single street. So there is a lot more to making a decision about whether a home or an apartment is going to perform, and you need to look back at not just at this number of whether there's been growth, negative growth, or positive growth.
And again, is if you look at the total return there, I mean, Brisbane, this is your time, Zoran. 34.2%. So obviously we're taking the capital growth there of the 29.7%, plus then you're saying rents are 5 or 6% because the rents are generally higher up in Queensland. So you guys must be pretty happy.
Yeah, for sure, guys. Obviously, Brisbane was, I guess, underperforming for a long time, and we're finally playing catch up. I legitimately think that the growth that we've seen that year to date, or that last 12 months, is Brisbane playing catch up to the level that it probably should have been if it had enjoyed a more regular and linear growth pattern over the last decade. So a lot of people ask me, where's the future of Brisbane? Is it too hot? Is it too late? No, I don't think so. When you compare us to obviously the likes of Sydney and Melbourne, and then you look at the infrastructure and the positivity heading our way over the next decade with the Olympics and everything else, I think that phenomenons like flooding and this sort of stuff will come and go. But if you stick to the fundamentals, I think Brisbane still offers a lot of potential. One of the really interesting things that I wanted to note from those stats as well is that median price of $722,000. Realistically, to get within a 15K, 20K radius, that's really what you need, right? You need circa 700 and above to be able to get something in that sort of radius. And what I mean something, house, freehold with land, right? You can get some units at a lower price point potentially, but that level and above is really the Brisbane entry level now. And I'm getting a lot of clients who are genuinely surprised when they say to me, Zoran, I've got $1 million, what can I buy? And I share with them what they can buy for $1 million. Because if we look at that stat, that property was 700,000 there or thereabouts 12 months ago. So people really need to be in tune with what's going on in the market and be realistic. Just quickly on the rental side of things, rental yields dropped in Brisbane because obviously we've had such significant growth, and that obviously creates a disparity, but rents are starting to rise. Lease renewals, we're seeing healthy increases. And also, due to the floods, and obviously some people unfortunately being displaced from their homes, that's only adding more pressure on the rental market at the moment as well. So if you're an investor and you thought, oh, the yields were getting a bit eroded in Brisbane, they're definitely coming back.
And again, you've got to look at the percentage and the real dollar value as well, because it's easy to say, oh, they've dropped 1%. But if the market's risen 20 or 30%, that's all it is. So you're actually physically still getting the same rent on your same existing property, but it's just the property value has gone up as well. And look, another thing that I'll ask your opinion on is I had to do an article for CanStar yesterday. They said with lots of property prices predicted to collapse in 2022, or at least go down, where do you see those? Where are the properties that are going to go down? And my first comment on that was, look, just because the banks are predicting that the market's going to go down doesn't mean that that's correct. Because let's look at their history at predicting the truth or predicting reality the last few years. At the start of COVID in 2020, they said the market could drop 20 or 30%. In effect, most areas was only maybe 5 or 10%. And that was a temporary kind of bounce down that then bounced back up again. And so it wasn't really a drop. And that was effectively the scaremongering and the big worrying thing. Then in 2021, then they said, right, okay, we think the market's going to rise now and it's going to go up 5 or 10%. And then it went up 20 or 25% in so many places. So the banks are hardly the best experts at going to do it. So if now they say, oh, the market's going to drop 5 or 10%, I don't necessarily believe them. But again, my suggestion was, I still think the blue chip suburbs, the medium price properties, which all of us buy, I still think we might get 5, 10, maybe even 15% growth this year, because I still see the demand there. Whereas maybe personally, what I think of what might be going down is where we had some of those regional towns and some of those coastal towns that suddenly had 40, 50, 60% growth. That's what I think could change, because I think people will suddenly realize that there's so much traffic congestion there. Local workers can't rent because everything's going Airbnb, and so they're not going to be able to get workers to work in the pubs and the restaurants and the cafes and all that kind of jazz. People can't get their Uber Eats. They can't get a choice of 100 restaurants. There's maybe only 2 or 3. And certainly I think a lot of people are going to be forced back to work 2 or 3 days. So suddenly if they're then doing that long commute and probably staying in a hotel for 2 or 3 days in Sydney or Melbourne or Brisbane, then certainly that cost is going to go up, and suddenly maybe they haven't got the ideal life. But what are your thoughts down in Melbourne, Lauren?
Yeah, I agree with you, Chris. I mean, first, if I go back to the predictions of the banks, yeah, you're spot on. They've rarely got it right. Even during the GFC, we didn't go backwards, and that was considered to be the biggest financial crisis we've ever had. Well, in the areas that we're buying, it really flatlined, didn't go backwards. I think that the locations that are going to have trouble are probably the ones that are of a lower socioeconomic parameters, because if we have some inflation, which is due to occur, it is going to occur over the year, then there's going to be more difficulty being able to fund purchases, perhaps in the sort of outer regions where people have bought house and land packages, where they're a dime a dozen, they're coming up all the time. And I certainly think, for me, I've been saying this for a while, that the Mornington Peninsula and Victoria, that, we had suburbs alone that went up 40% throughout the calendar year. That's unsustainable. It can't continue that way. And a lot of people did, these prices went up that way because people made choices to move down from a permanent position, and also, buying holiday homes. And I think that the reality of living in your holiday location changes when you live there. First of all, the shine of living in where your holiday becomes the same mundane place that you live in, normal life. So it loses that shine. And I think in Melbourne, we've now got to return to work. Everyone's returning back to the city. There's not the work from home enforced. And I think it'll just change people's view again. The city will become exciting, as it always has been. I don't think it's going to really drop. It might flatten, might soften a little bit, but it certainly won't be going in the ways. So there could be some good buying in regional and coastal locations.
And Zoran?
Yeah, guys, we've seen a big phenomenon of Southerners purchasing up here with the ambition to Airbnb, and only recently our Premier and also some large stakeholders in the real estate industry have stepped out and said, we want you to lease them out in the long-term market, because there's such an undersupply of rentals here and a rental crisis. A lot of people are calling it, across certain areas of Queensland and obviously those tourist destinations. So I think it's going to be interesting to see how that plays out. We could see quite a lot of people sitting their properties on Airbnb, and obviously, depending on occupancy, they could be sitting vacant for quite a while, but then that demographic may not really care too much that they're sitting vacant, rather use them for their personal enjoyment. So that's definitely something that I think is, restricting our rental market from supply. But that's only making the yields for investors stronger who want to put their property on long-term rental market as well. So there's opportunity in every market.
Yeah. So look, there's definitely opportunity there, but the more you chase the highs and the lows, and I guess the Airbnb type things, certainly one thing in the market could suddenly change that, and suddenly you don't get the results you want. So I think straight across Sydney, Melbourne and Brisbane, most of us are on the belief of long-term buy and holds, rent it out on a long-term lease and go for consistency rather than overnight success. Well, thanks for joining us. And certainly if you want a personal update on your situation, certainly reach out to Lauren Staley in Folio Property Advisors and Your Empire in Melbourne, Zoran Solano from Hot Property Buyers Agency and Your Empire in Brisbane, and myself, Chris Gray, at Your Empire in Sydney. Thanks for joining us, and we'll see you again next month.